So the crypto cycle may be over. And before you start leaving angry comments and claiming it's clickbait, I've got a thesis that I want to run you through in today's video. And we have a very special guest who's joining us, Fabian, who you might know from the Discord. He's amazing on the macro side. I actually found him back in 2023 for his macro commentary. And I think it's a great day to have him on because he's very well versed in markets. It could give us a nice high time frame perspective and lens as to what's happening right now. And we're going to unpack this thesis here that the cycle may be over and then look at what that actually means, because without the necessary context, it doesn't really mean much, does it? So today we're going to unpack all of that. We're going to talk about markets. We're going to talk about what's happening in the stock market. We're going to talk about the AI bubble. It's going to be an Alpha Pack show. And Fabian, welcome to the video here.
Yeah, thanks for having me on. It's great to finally be here. We've obviously been in touch and working together for a long time, but it's good to finally do a stream with you.
Yeah, and you picked a great day to come on. It's funny, I had the idea to maybe do some joint stuff with you last week. I didn't think that our first stream was going to be on an absolute bloodbath day, but here we are, and it's probably a good day for people to get your expertise. So yeah, looking forward to this one. And you know what? I'm not going to waste any more time. I'm just going to go straight into this tweet that I did this morning because this sums up how I'm thinking about the cycle right now, and then I want to get your take on it. So I said, the way I'm thinking of it is that the Bitcoin cycle is definitely over. That is the cycle of DAT buying, strategic Bitcoin reserve hype, and record ETF flows. But here's the caveat. Cycle is over as a headline freaks people out as they instantly get 2022-23 PTSD. But it really depends on your definition of cycle. I'm not a subscriber to the 4-year cycle, as crypto is more driven by macro flows and narratives now more than ever. Currently, we're in the process of finding a floor as we wait for the next cycle trigger. Very likely that it's driven by debasement, AI energy race, liquidity expansion, all of which, by the way, we're going to discuss today. This could actually come in a matter of weeks or months. It doesn't have to be 4 years. Bitcoin is a macro asset now. Adapt and play accordingly. So basically what I'm saying is, yes, the cycle's over, but the way I think about Bitcoin is in terms of mini cycles now rather than the long drawn out 4-year cycle. If Bitcoin really is a macro asset now, then okay, we've had one cycle of DATs buying, ETF flows, and strategic Bitcoin reserve. That's come to an end because we've seen that reflexive trend now start to become reflexive to the downside. However, it doesn't mean that there can't be another cycle triggered by a new liquidity flow, triggered by a new macro catalyst. So this framework of the fact we need to have a huge multiple year bear market every single time, I don't believe is the case, which is why I think we're in a much different environment to what we used to be in. But that is contentious for some people because I know there's still a large cohort of people that do stick to the 4-year cycle. So I guess, yeah, going over to you, Fabian, what do you think of what I just said? And do you believe in the 4-year cycle, or do you think Bitcoin is now a macro asset?
Yeah, no, I pretty much completely agree with everything. In terms of the 4-year cycle, so I've never really been a believer of it. Even last cycle, actually, the 4-year top did just kind of happen to coincide with a broader kind of macro top across really all risk assets, right? However, it could have some effects, I think, in terms of like a short to medium time frame, just kind of self-fulfilling prophecy where people will take profits around that time. I think we're seeing a lot of that right now. But when you're looking beyond that, on longer time frames, say 6 to 12 months out, I do really think that the primary driver of the cycle is macro, and really always kind of has been. And so I'm with you in the sense that even if we do go into a little bit of a bearish period here, I don't think it's going to look like previous bear market cycles for Bitcoin. And at the end of the day, the bigger question to me is really whether kind of Bitcoin will outperform or underperform on a relative basis versus other risk assets like, let's say, equities or even gold, right? But in terms of the cycle itself, I think it's largely going to follow the other major macro asset classes.
If you look at Bitcoin right now, as we load the chart here compared to equities, it has been pretty shaky over the past few weeks. Like you can see Bitcoin here is this green line and had outperformed on the weekly for a long time and kind of front run the equities rally. But now if you look at the sell-off, it actually front ran the equities sell-off as well. So Bitcoin started selling off. It's the green line. Once again, equities are the candles. Bitcoin started selling off on the 6th of October, been pretty aggressively down since then, 30% down. Equities actually had a period of outperformance and have now started to dip. And if you go back and look at the pump for Bitcoin, Bitcoin also led the pump in April and also led the equities pump in early October before, retracing those gains. So what's going on here? We're seeing Bitcoin front run, but also underperforming and front running to the downside as well.
Yeah, that's something we see pretty commonly over the past few years, where Bitcoin does tend to front run the turns in equities, both to the upside and downside. Generally speaking, Bitcoin is like a lower volume, lower liquidity asset further down the risk curve. So it's more on the fringes. And oftentimes in markets, turns usually do tend to happen more at the fringes first. I think that's pretty much what we're seeing here again. There are, in my opinion, two sides to this Bitcoin sell-off. There's the macro side, and then I also think that there's very obviously Bitcoin intrinsic factors that are at play that are affecting it exclusively, right? And not like broader equities and stuff like that. And we could go into a little bit of both of those. As always, though, it's usually the macro stuff that really triggers everything else, right? When macro starts turning, at least on the margins, and you get some marginal deterioration, that creates a little bit of weakness in which other kind of underlying sensitivities that were always there start to emerge. But yeah, we can go over both of them. I'm not sure in what order you'd like to go over that.
Well, I guess one of the things a lot of people are saying right now is that this sell-off is being, triggered by something. I kind of want to clarify that, and I think you would agree. Like, I think this is a macro sell-off that's being exacerbated rather than a systemic thing to crypto specifically. Like, I think that 10/10 liquidation event in October did a lot of damage. I think maybe you're starting to see some bodies come to the surface now. Like, we have seen a lot of material unwinding happening, specifically on Binance, but it could just be because Binance has the deepest liquidity. But we notice like every US open, the market is slamming down. Then obviously that's, continuing now into Asia session as people, I guess, get scared and jeet their positions and short and all that sort of stuff. So there's definitely been some sort of material selling. But I do want to make the comment that I think at least the principal reason why Bitcoin sold off is a macro driven reason, which is also why you're seeing equities drop off as well. It's just Bitcoin is selling off much more aggressively because of those factors. So obviously there's MicroStrategy FUD that's starting to come back. I do want to talk about that today and talk about what the risks are for MicroStrategy. But I think primarily you can put it down to the DAT trade unwinding because that was propping up the market. So it probably ran a little too high off the back of that. And now we're starting to see that unwind. So I guess in a way, like leverage coming out of the market, combined with the fact that October 10th caused some issues and we don't know who, but we're starting to see some stuff come to the surface. I mean, it's clear on the order books. But yeah, Fabian, anything you want to add to that and any other things that you're seeing that are responsible for a greater dip on Bitcoin right now versus equities?
No, I think you actually pretty much went over all of the main kind of, factors that are at play right now. And so we could kind of dig deeper into any one of those.
What do you think the main one is? What do you think the main culprit that's pushing the market down is right now?
It's really tough to say. I do think it's a little bit of everything. Like I said, I do think the macro kind of deterioration, or, I want to call it, let's say, macro hiccups that we've seen lately, because a lot of these things I do think are more temporary and will resolve themselves over time. But I do think that probably kicked things off. And it's really after that and after it creates weaknesses that you see all of the other things kind of spiral, right? There's some reflexivity there. The DATs are obviously a really big cause of the fear and sentiment that we're seeing right now. And so you could get a lot of selling as a result of that, either directly or indirectly. Now, when thinking about, if it's having any direct consequences, so are the Bitcoin Treasury companies actually selling their assets? That's harder to say. We could kind of go through it a little bit, but I don't think the biggest ones are, right? Like MicroStrategy is nowhere near the point where they would need to. They've communicated pretty clearly that they're not. And we've seen them below a 1 times MNAV in the previous bear market. And if you'll remember from 2022, that was when a lot of people were actually calling for them to capitulate as well, and it never happened. And that's not to say there can't be a point at which it would happen. There definitely is, but I don't think we're anywhere near that right now. And so if we are getting DAT capitulation, that's probably coming, in my opinion, from either one of two kind of areas of DATs. And that's great. You have the screener up in front of you. So you can see all the largest Bitcoin DATs. We just talked about MicroStrategy. Metaplanet in their communications doesn't seem like they've really been unloading, at least not yet. And then a lot of the other big Bitcoin DATs are actually SPACs. So you have things like 21 Capital, the Bitcoin Standard, right? CEP, CEPO. And as far as I'm aware of, they don't need to and are very, very unlikely to sell because they're not live yet. So they had that Bitcoin committed to them or money that they used to purchase Bitcoin committed to them before going live, and they're still in that merger kind of process and don't need to sell any Bitcoin at this point in time at least. And so the likely culprits, if there are treasuries selling right now, are either the smaller ones, which could add up in size if there's a lot of them, or the Bitcoin miners who cumulatively hold about, and this is like a rough estimate of mine, but about maybe 100K worth of Bitcoin altogether. And they could be selling as a result of one, just kind of, downward pressures that we do see every cycle, that there are periods in time where when they get a little bit strained, they sell to raise cash. But another reason that I haven't really heard a lot of people talk about yet is that a lot of these Bitcoin miners are transitioning to AI data center plays. And that obviously takes a lot of CapEx, right? They need money in order to build out or optimize their facilities for AI in particular. And so could they be selling some of their underlying Bitcoin to raise money for that? Maybe. I don't know. And we probably won't know until after it's revealed, perhaps on like an earnings call or something like that. But it's definitely a possibility.
I saw this article actually yesterday from the Wall Street Journal. AI data centers are banging on crypto's door. Developers desperately need to access electricity, and Bitcoin miners are in prime position to assist. And obviously, the lower the Bitcoin price goes, and the bigger the rewards on the AI side, and the more demand for data centers, the more we're starting to see that switch happen. I don't know how much of an existential threat it is to the Bitcoin mining ecosystem, but it's definitely a narrative that's starting to brew. And it's interesting because we haven't seen this dynamic before in the Bitcoin market.
Yeah, definitely. Again, it's really hard to say exactly if they are, and even if they are, then how much of that is actually going on underneath the hood until after the fact, right? We always kind of learn about it after it happens.
What do you think about MicroStrategy specifically? Because obviously there's a lot of talks about them unwinding. Like, my understanding of the situation is their average repayment is in 4.8 years' time. So they have many years of flexibility here, and they have many options to restructure debt if need be. But at what point would MicroStrategy be under pressure, and at what point does Bitcoin's drop start to affect them, and how could that unwind, if at all?
Yeah, so in terms of, any potential immediate selling from MicroStrategy, that's not a concern of mine at all at this point. So like you said, right, they're not yet levered up enough in terms of debt on their balance sheet for their hand to be forced before Bitcoin gets to something like the 20Ks range. The math was crunched a little while ago. I can't remember the exact numbers now, but ballpark, it's something like that. And as I said before, we've seen them dip under a 1 times MNAV last bear market as well. We got, a whole round of FUD that lasted for like 6 to 12 months around MicroStrategy's eventually going to have to sell, and it never actually happened. But with that being said, I am actually still looking at this whole thing as a potential multi-month or even multi-quarter overhang. kind of like a dark cloud above Bitcoin that could continue to rear its head from time to time and weigh on the asset class. And the reason for that is because, number one, MicroStrategy, as well as the other DATs, which were a large source of demand in the past, are now kind of completely tapped out, right? There's still going to be a marginal buyer, but nowhere near as big as before. And so you have a huge source of demand lifted. But then, other than that, you do also kind of get a little bit of reflexivity from this whole thing, where even if MicroStrategy themselves don't directly sell their Bitcoin, you start to get worries and concerns around it, and other people act on those concerns, right? That's the whole idea of behavioral reflexivity in the markets. And so I do kind of worry that as long as MicroStrategy is around or under a 1x MNAV, people are going to be worried about it. And markets have a funny way of at least trying to test different pain points that they see, right? And so like the first one for MicroStrategy, for example, that's kind of a key level on my radar is their average Bitcoin cost of 75K or thereabouts. And that also coincides with the exact line that you've drawn in your chart there. It's actually a pretty well-defined high time frame support zone around that 75K mark. And so at some point, do I think we could test that again? Yeah, maybe. And then that's when we'll really see kind of, the FUD around MicroStrategy really perpetuate as everyone starts to say, well, Bitcoin's dipping underneath their average cost basis. So I do think from a behavioral perspective, just kind of the fears and worries about, an eventual capitulation by then, even if it's not anywhere close to us, could weigh on price and kind of pop up time and time again.
Yeah, definitely. And I think that's one of the big reasons why Bitcoin is selling off. Probably, it was extremely overhyped. Like the DAT narrative, and it also took Ethereum to what, like $3,000? Sorry, $5,000 again, and now it's dipping below $3,000. So that the same reason why Ethereum pumped so aggressively is the same reason now why it's selling off so aggressively. Do you actually, by the way, have any specific opinion on Ethereum at the moment? Because this narrative is suffering a lot. Obviously, Bitcoin's also suffering, but yeah, interested if you have an ETH specific opinion.
Yeah, I am actually a lot more bearish on ETH than Bitcoin in particular. And I also do think that the DAT unwind risk is probably a lot larger for ETH. So unlike Bitcoin, ETH, and this might be a little bit of a contentious kind of thing to say to a lot of people, but ETH is really seen as a lower quality asset, especially in the eyes of large players, institutions, etc., relative to Bitcoin. And so because of that, the DATs themselves will probably have a harder time actually raising funds and being able to refinance on favorable terms as opposed to, let's say, a MicroStrategy, right? Not only that, but they're also newer on the scene. So MicroStrategy has a lot of history behind them in which they built up a system of trust and reputation that the ETH DATs simply don't have at this time. And as far as I know, I can't remember the exact numbers, but I believe that the total amount of ETH that's still being held by all of the DATs together is somewhere in the ballpark of, let's say, 5 to 6% of total ETH supply. And right now, pretty much all of them are sitting at either a 1x MNAV or just under. And I do think that that could continue to dip lower. We're already seeing signs of a few of them capitulating. We know that SharpLink has been selling some ETH to buy back shares, as well as others such as Nexus, and I believe there was even one or two more that I'm forgetting now. And so we're seeing it start.
Do you think Bitmine and Tom Lee will have to sell? Well, how's their balance sheet looking?
I do think there comes a point where they will be forced to. Now, I don't know the exact governance structure in terms of, like what percent of the shares Tom Lee himself holds, or people who are aligned with his views and interests, etc., versus, other shareholders who might not be as aligned and might be in for more of that kind of quick in and out. So I do think that as long as if it follows a normal governance structure, there will come a point where shareholders essentially force their hand, no matter what Tom Lee himself wants. Because for him, he has his reputation on the line here. He's going to try to hold out, but there will be a breaking point there. Now, where exactly that is, I don't know yet. But I am inclined to say that we do test that at some point. Yeah.
I guess the question is, like, how much of this will, and I guess it's impossible to answer, but we can speculate, like, how much of this unwind will be materialized versus how much is being narrative driven right now. In other words, like, is this the reason we're going to be forming a bottom soon because the market's really scared about something that won't eventuate, or is it going to materialize into something much worse? Like, do you have a bias there in terms of how much worse this DAT unwind narrative could get, or do you think it's something that actually could, spark a local bottom?
Yeah, so I do think it will get worse before it gets better in kind of like the grand scheme of things, right? Thinking really, really big picture, like out to 2026 and beyond. But I also don't think that it happens all at once. These things never go in a straight line, right? And so you're going to kind of get starts and stops to it, in my opinion. And so at this point in time, I personally think that we're much, much closer to putting in a local bottom here. We've been seeing a lot of signs of really big capitulation that's lasted for, well over a week now and seems to be culminating at this point, alongside the fact that we're kind of reaching extreme levels of drawdown in both price and time for Bitcoin, going back the past almost 2 or 3 years now since the whole bull market started. And so I do think we're closer to a local bottom than not. But I don't think that even if we do bounce soon, which is what I'm betting on, that this is the last that we've heard of, the DAT fears. I do think it will pop up from time to time again over the coming quarters.
I posted this earlier and I was just highlighting the size of the current dip on Bitcoin versus past dips. It's actually sitting right in the range, 31.94 compared to 31.96 as the last dip in April. The last big dip before that in 2024 was minus 33.84%. So I was basically just highlighting, like, this isn't an uncommon size dip for Bitcoin. Where it is a bit uncommon is that we're getting this sized dip in conjunction with the 50 weekly moving average breakdown, which is like a very popular moving average in crypto for bull markets. Also the money noodle, which we use in the Mars High Club. Do you view this as like a full, like, cycle ending? And we discussed before that cycle ending might not mean what some people think, but cycle ending event, or do you view this as, I guess, an event that will end up resolving in us seeing higher Bitcoin prices? And I guess to answer that question, I'd like to hear more about your macro thesis on where this is going over the next year or so, even beyond this current period of headwinds.
Yeah, so I mean, on that point, kind of like we said at the beginning, I do view macro as the primary or the biggest driver for Bitcoin. I don't fully ignore the technicals either, though, right? And I will say they're not looking very pretty right now. And so even if the macro cycle is still intact, which I believe it is, in terms of, broader risk assets on a, call it 6 to 12 month plus time horizon, that will offer Bitcoin support. However, the bigger question for me becomes, well, even if that's the case, that doesn't necessarily mean that Bitcoin has to, let's say, outperform equities or gold and rally to new highs, at least not imminently, as long as there's still some kind of overhangs from either Bitcoin intrinsic factors or even technicals, like you pointed out, key levels like the 100K psychological level, 50-week moving average, which coincides there too, which could prove to be resistance for some time, maybe a few weeks up to a couple of months, as any bounce up there will be met with sell pressure before, we can even think about potentially breaking through it. And so it's a little nuanced. The shorter answer, I guess, is that at the end of the day, I don't think the cycle is over. until macro fully turns and we enter a broader risk asset bear market. However, there are specific headwinds to Bitcoin that, could kind of lead to choppier price action for a little bit as we get through them. So with that, to go on to the second part of your question there, which is the macro. I guess the place to start with that would be to first identify, like, what are the key macro issues or narratives that's driving asset prices lower right now, right? So what are we contending with at the moment? Well, the way I look at that is that this dip, from a macro viewpoint, was really a function of, number one, being overextended on the positioning side of things, right? And I'm not just talking about crypto anymore here. Obviously, just about as of like 1 to 1.5 months ago, before the October 10th liquidation event, crypto was also very heavily overpositioned for or oversaturated on the long side. But also in terms of equities, we've seen a huge performance chase since the April lows, which have lasted for about, I want to say, like 6 to 7 or 8 months now, just kind of off the top of my head, without any major pullbacks. And positioning metrics across a variety of different signals have been kind of flashing that they're reaching very overextended territory. But positioning itself isn't a reason for a correction most of the time. Having overextended positioning will start to bring weakness, but you usually need a trigger. And so this time around, what the trigger was, in my opinion, was a few different, I want to call, liquidity hiccups that started to emerge. So the first one, which kind of began around the September to October timeframe, was that we started to see stresses in the repo markets, right? And repo markets are just overnight lending facilities for major financial banks in the system. And we've seen a decline in bank reserves coincide with that, which basically manifests as strains in financial system liquidity for the broader economy. And at the same time, we had the government shutdown, which was also marginally liquidity negative, right? I know you've spoken about this before on your show, but TLDR is that we saw the TGA, or the Treasury General account, build up really significantly as a result of that, which pulls some liquidity out of the broader financial system. Now, there's some debate about, how important it really is. Like, the correlation there on a historical basis is a little bit weak. But nonetheless, at the margins, these are all kind of things that add up, I think, right? And then on top of all of that, so we're basically getting signs of liquidity strains in the system. And the number one player at this time who can do something about it, which is the Fed, started to pivot more hawkish at the exact same time, right? So following last FOMC meeting, we got a huge pushback on rate cut expectations, not only for December, but if you look at the implied rate cut probabilities, which you have on your screen right now, they've been pared back quite significantly, going out all the way until the end of 2026 from where they were before. And I actually do see they have been starting to bounce back a little bit as of, I want to say, maybe 1 or 2 days ago now, but they're still a lot more hawkish than they were just 1 or 2 months ago. And so you had all of these things at the same time, which was a lot for markets to digest all at once. And, even looking beyond the situation in US liquidity, we're also starting to see a little bit of the first signs of broader global liquidity pulling back with other major developed economies. So things like China or even Japan, which we're hearing about more lately, given that their treasury yields have been aggressively rallying too, right? And we could get into that a little bit if you'd like. But, TLDR here is that it really started as positioning being overextended and then kind of sudden or surprise pullbacks across a lot of areas of key liquidity in the macro economy, which coincided all at once.
Yeah, I think that's a great answer. Really good. I mean, yeah, that's essentially what's happened, and it's put strain on equities, and then you add the specific catalyst that we discussed before, and you have a situation that we're in for Bitcoin, where do you think the macro goes beyond that? So obviously the US is out of shutdown now. We're hearing that they're going to try and support banks more. We know there's a 1.4 trillion stimulus package for China. Trump wants to have the $2,000 stimmy checks. We know that there's midterms coming up. I can't imagine Trump would want a huge market collapse before midterms. We know that there's a new Fed chair coming in. Like, do you think this situation can turn around, or is that what you're forecasting, or do you think it's going to continue to be strained for a little bit longer?
Right. So this now gets to your question about, what's the broader macro cycle outlook going into, let's say, 2026, right? And my short answer on a long time frame is that I do still think the macro cycle's intact, although we are seeing signs of the liquidity cycle kind of deteriorating at the margins, but it's not yet at the point where I think there's a large probability of something like an imminent recession manifesting. And we do know that we have midterms coming up in just under a year now, which will be the Trump administration's main area of focus, right? Nothing matters more to them than the midterms at this current point in time. And as a result of all of these kind of things that we've been seeing and various other political dramas, Trump's ratings have been falling quite a bit in the polls. And because of that, he's now more incentivized than ever to try to prop up both the economy as well as financial markets as best as he can going into midterms. And so I do think that will offer us support into next year, and will more likely than not uphold the current macro cycle as we head into midterms. And then on a kind of shorter time horizon, I do see many reasons for why the current set of worries that I just highlighted a minute ago will relieve at some point and will actually be replaced with liquidity tailwinds from a variety of sources. So you already alluded to a few of them, right? But to kind of continue off that list, we now have QT ending on December 1st. Okay, that's marginally positive. The government has reopened. So as I said, the TGA had been building up before this. That's now starting to get spent down. Once again, marginally positive. And then in terms of the rate cuts that we mentioned, in my opinion, they're now at the point where they're leaning way too overly hawkish for 2026. We do know that the Fed board in general is being overturned by the Trump administration, as well as the Fed chair, which is likely to be announced. So the new Fed chair is likely to be announced before Christmas, according to kind of, the latest word from Trump. And once he is announced, I can bet you anything that he's going to come out almost immediately and start putting out a bunch of dovish and positive headlines to make his new boss happy, right? And so markets will start to anchor to that and lean more towards what he's saying rather than Powell, because they know that, he's kind of going to replace Powell over the next couple of quarters. And going into midterms, we know that Trump really wants rates to come down, and his new hire won't want to disappoint him in the first year, that's for sure. So he will oblige. And so I really do think that we can see a lot of this kind of overly hawkish rate cut pricing start to mean revert. And that's positive when thinking about it from a rate of change perspective, right? So we have all of that. We also do have a few other potential catalysts on the fiscal side of things. So for one, the tariff ruling from the Supreme Court is expected sometime in December or perhaps January at the latest. And the potential benefit from that is that Trump is now at a point as we go into midterms where he doesn't have that much leverage to try to fight it. I believe polymarket odds of his tariffs being overturned are something like 70 to 80%. So it most likely will happen. And if Trump tries to fight it aggressively at this stage, he risks causing bigger turmoil ahead of midterms. So he's more likely to kind of let it slide, at least at the margins, in my opinion. yeah, he's going to talk the talk and whatever, but he'll let a lot of the tariffs roll off, in my opinion. And that will also cause a backlog of tariff-related taxes to be returned to businesses probably sometime in the first half of 2026. And that's basically a stimulus kind of injection into the broader economy again. So that's potentially bullish. We might be getting news on that as early as this month, or sorry, December. We're still in November. And then finally, just generally, as we head into midterms, Trump is going to try to pull every trick up his sleeve to prop things up, right? So that includes things like tax rebates, talk about various forms of fiscal stimulus, and just, liquidity injections in one way or another. And even just the narrative of that is something that markets will look forward to, regardless of, the actual extent of it that does end up coming down the line. So for all those reasons, there are, in my opinion, a lot more reasons to look for relief in the current situation over, I want to say, the next maybe 1 to 3 months, right? A 1 quarter time horizon. So there is still a window here where things can be dicey for a little bit, but going into Q1, at some point then, I would be looking for a marginal improvement across all of the issues that we see right now. And even when you're looking at things like the dollar, which is well known to be inversely correlated with liquidity, we are getting to a point at which it's becoming it's starting to retest structural breakdown levels. And I do personally think the dollar is still in a structural bear trend, at least until proven otherwise. And so these are points I'm looking for probably sooner rather than later now for the dollar to turn around. And that would be a major kind of tailwind for both liquidity and broader risk assets.
Yeah, I think that's beautifully put, and I think these reasons are why I've been adding to my Bitcoin position over the past week. My DCA should be wrapping up tomorrow. Now that the market's down, I have a chance to get my cost basis into the mid 80s, and I could be underwater for a little bit, but I'm taking the bet that we at least see enough relief at some point for that trade to be up. Uh, Also, as I mentioned in the Discord AMA I did with you the other day, I've also been DCing into Chinese equities. I don't think we'll have time to go too deep into that, but I think that's an interesting value play, and also looking at a few like energy tech stocks as well. But interested to know how you're positioning during this period. Like, are you actively buying? Have you been deploying? Are you waiting? How are you positioning in this current market? If you do think there's a chance that we get relief in 2026.
Yeah, so I have been actively buying Bitcoin on the way down. My average cost basis of my purchases is now higher than where the current price is, but I'm comfortable with that. And I am DCing lower. I actually just bought a little bit more this morning and plan to buy down to 75K, which is, that major high time frame support that you highlighted before, if we do get it in kind of one fell swoop. Now, with that being said, my time frame for this trade is more so of a swing trade on a multi-month or even multi-quarter basis. I do think that the bottom could potentially be messy here, similar to what we saw in Q1 earlier this year, which you can see on the chart there, where we put in a series of 3 consecutive lower lows and really kind of freaked people out, right? With every bounce that would get faded, people would get increasingly bearish before the ultimate low was put in. We could very well get some sort of messy bottom like that as we contend with kind of the short-term issues that we highlighted. And my time frame for that, by the way. So what I'm really looking for here in terms of a tangible bottom is for the last shoe to drop, which in my opinion is equities, right? Bitcoin front ran the whole way down, as you pointed out before, and equities are kind of starting their descent now, or starting the acceleration part of their descent now, or so it would seem. And as you mentioned before, oftentimes when Bitcoin front runs to the downside, it also bottoms first. But the bottom can be messy until equities put in a decisive bottom. And in terms of time frame for that, I'm really looking at this window of weakness for equities to be essentially from now, or it started a couple of weeks ago, in my opinion, up until or around the December 10th FOMC meeting, because it's between now and then that markets are basically digesting the hawkish pushback on rates and the possibility of no rate cut in the December 10th meeting. And so that's kind of the window that I'm looking for equities to put in most of their capitulation. And then it's even possible that we get this sort of, residual pressure lasting into Q1 of next year, or into, let's say, January sometime. And so I'm giving it time to play out, but these are levels now, because we're so overextended in a historical basis, right? Again, over 30% drawdown on Bitcoin, etc., that I'm comfortable starting to buy the dip, and will continue to do so, across that time frame.
I'm in the same boat. Like, if you're a long-term investor, these can represent fantastic opportunities. But if you're trying to catch the bottom for a short-term trade, then it's risky business, because you're probably in that case better off paying the price of confirmation than the price of catching a falling knife, which I think a lot of people are trying to catch right now. I'm happy to do it with that longer-term thesis in mind on Bitcoin specifically, and even on some top alts, but mainly just Bitcoin, a little bit of MicroStrategy and equities. But I wanted to speak on alts for the last 10 minutes here, because obviously we've discussed macro and Bitcoin a lot, but how do you view the altcoin market? Like, are you DCAing into any coins long term? I know you like trading short term, for example. I know you're still really active in the Discord. Like, you called grass the other day, and then it pumped like 60% in a day, which is pretty crazy. So it just shows you there are still opportunities to trade and make money off altcoins even in this market. But we've heard your long term thesis. What are you doing with your altcoin positioning?
Yeah, well, from a kind of tactical trading, standpoint, grass, I think, is a perfect example of why I actually personally love trading in more bearish conditions. And the reason for that is because most people get really complacent. And when people get complacent, you get a lot of very interesting setups that, while it might take some patience to manifest, they kind of fly under the radar for a long time and give you an opportunity to position ahead of the crowd. So grass was a good example of that, because it obviously pumped, we won't go into all the details here, but pumped basically on the news that the team will be hosting an event in which they address token holder alignment, right? And that was kind of the big issue with it before. And that news was released, I want to say, like 12 to 24 hours before the real pump actually started, which gave a lot of people time to digest it and position before the broader markets caught on. And that's just a result of everyone being so complacent right now. So there's always going to be little opportunities like that. In the bigger picture, I'm actually kind of starting, for the first time since this dump started, to get more interested in looking for, I want to say, multi-week to multi-month swing trade opportunities in select altcoins. I say select altcoins because you obviously have to be very careful about what you're buying here. You need to be very selective. But as you can see, like right in front of you there, it's a post I put out just this morning, but the others chart, which is an index of the top, I think it's like 120 altcoins, excluding the top 10, right? So it's a broader index of altcoins overall. It's approaching quite literally multi-year lows and support levels, and going all the way back to Liberation Day. So April in Q1 of this year, capitulation levels. And these are areas where I'm starting to get a little bit more interested. I haven't personally pulled the trigger on anything yet, but I am starting to look for potential bounce opportunities around this point, as I kind of get more confidence that Bitcoin and markets overall are, putting in a tangible bottom. The way I like to do it is I usually start with Bitcoin on the way down, because I'm more comfortable kind of starting at the conservative end of the risk spectrum, and then I go further down the risk curve as I gain more confidence that the bottom is in fact in. That's how I approach it. But curious to hear, what your approach or strategy is with altcoins right now also.
I have a pretty similar strategy. So it's been Bitcoin, then further down the risk curve MicroStrategy, because that's like a levered version of Bitcoin, but without having to take on leverage. Then further down the risk curve, ZEC. I've had 2 bounces into like 450 to 500 that I've added. I think you might see it again. In fact, if you guys want to see my chart, I'm tracking ZEC, which is Zcash, on the H12 noodle, which has been really nice. So I think we're probably going to see another retest of this zone now. So I might buy again at 550. That's the only thing with like, I think, broader market narrative appeal right now. But there are lots of low caps that I'm kind of nibbling and looking at, but they're like, in my DGen long-term portfolio. I think some of the leaders from each chain I haven't bought yet, but might be worth looking into. Obviously, you've got Solana, which is coming down into my buy zone. Haven't bought yet, but based on the reaction here, I might. I'm considering it. It could even, come down and kind of do something like this, and then we could reclaim. Let's see. Also looking at like Arrow on base, all these sort of leaders, I think, are the place to start. So just like you going Bitcoin, strategy, ZEC, then moving down the risk curve. I'm down to 40% cash, but I'm trying not to allocate a crap ton because I know that once the signs of a Bitcoin bottom are in, we can see alts start to give us these new uptrends, and then we'll have a bit more data to go off rather than trying to catch a knife on alts. I don't mind catching a knife on Bitcoin because I can easily convince myself that Bitcoin is a long-term hold, but catching a knife on alts is a little bit more difficult unless you are fully convinced that the altcoin that you're buying, you'd be willing to hold for like multiple quarters or years. Most alts don't fit that category, so you have to play it a little bit more carefully. But obviously, the other thing I'm doing, barbelling my long-term strategy, is looking for opportunities in the market. And now is actually the best time. I did this tweet this morning because there is less FOMO, so it's easier to focus. You can actually like stop the FOMO of like short-term scalping every single pump and start thinking long-term research. Looking into narratives. You have way more time to do that. And the opportunities, of course, because prices are lower and there's less competition, means that they're actually more symmetric to the upside. And a lot of your competition on these trades is now, either sold or they're leaving. So a lot of my mental energy, not so much capital, because I'm keeping it in that like siloed in that 20%, but a lot of my mental energy is going into like spotting these altcoin trades and opportunities. Of course, I've been sharing these in the Discord, and I will as I continue to get more interested now that we're starting to look at moving down the risk curve, but a little bit needs to play out. I did want to announce, we haven't done this in a long time, but I'm probably going to be doing a Black Friday sale. We're just finalizing the details for Mars High Club. So if you want the first access to that, make sure you're in the Telegram, because I don't know if I'll be uploading a video on YouTube tomorrow, and it's going to be very, very, very limited spots. So if you want to make sure you get the offer as soon as it comes out, make sure you're in the Telegram. Of course, it's free. Link in the description below, and you'll get the first access to the Mars High Club Black Friday offer if we do it. It's going to be extremely limited. So that's below. But I'm focusing on these shorter term opportunities to barbell against long term, and that's probably what I'll remain doing over the next few weeks. I know there's this like tendency to want to clock out and completely detach from the market when the market's bad, but these are actually the times where there's the greatest opportunity. And I've been, firsthand experience of this throughout 2022 and 2023. So I'm going to play the game the exact same this time around, and hopefully it leads to some nice results. I'm seeing some alts are getting absolutely smashed right now, just looking through my trading list, but it's going to create opportunity for those that are patient. And I think there's plenty of trades like, even the grass one that I highlighted, there's much more of this, that, these teams that announce things and the market's just not paying attention. If you're someone that is paying attention, you know how to trade this stuff, you're going to have a huge advantage. And that's the kind of stuff we'll be sharing in the group. I know you do a great job of that in your channels, and, I try to do that in my channels as well. I want people to let us know in the comments if you like this combo, because the problem is we have so much overlap. We could talk about macro for hours. I think our AMA was almost 2 hours last week. So if you guys enjoy more of like a macro focus slash higher time frame discussion alongside some altcoin stuff, let us know and we can do this more. And obviously when there's opportunities on alts, we can do altcoin focused sessions. I think you're quite knowledgeable across an array of areas of the market, so we could do narrative based sessions, really anything. So yeah, let us know if you guys like it and we can do it again. Thanks for coming
Yeah.
on, Fabian.
Awesome. Well, thank you for having me. I definitely like to do this sometime again. It's been fun.
All right, guys. See you later. Good luck in the markets. I know it's brutal, but just these are the times where the real ones prevail. So yeah, a lot of your competition right now are quitting, leaving. They're feeling despondent. If you can stick around, this is how you get an edge on the market. And there's a reason why the people that you see succeeding in the markets during bull periods are those people, and it's because they're the same people that stuck around and continue to build their edge and survive the bad times. So it's survivorship bias, really. But if you want to become part of that bias, you've got to survive these periods. So I will see you in the next one. Peace.